Good morning, Green Room. Wow. This market keeping us on the edge of our seats every day here. Which way is it going to go? Which way is it going to go? So we got different pictures, which is a bit of a change from the indices looking pretty much identical. So we'll go through that, but a little bit of a different picture, and the Dow has been showing a little bit of relative strength. You can see how close it is to its 200 MA. There's some things to take note of. I'm not sure if we spoke about this last week, but as I'm looking at this, pointing out, here was the wide range bar, igniting bar off of the low. And notice that it happened on low volume. Now, it was the day after Christmas, of course, less trading, but the point to take away here is that volume from our point of view is secondary. Right? We don't trade volume. It's a secondary piece of information. If it's in alignment with the price action, fantastic. That's, a plus. However, over the years, what you'll find is that you don't always have confirming volume, and the markets can do, bullish things or bearish things without that. So, just a little piece of information to take note of as to, some people make a lot of big deal about volume, but it's price that we trade. And that's a big, giant bullish bar, right? And prices went up. And just kind of eyeballing this, maybe that was holiday too. I don't know, whatever was the volume. Maybe it was a change in contract. I don't know. In any event, you can see things can happen on relatively low volume or normal volume, and big moves can happen. Now, as we're going up here, the range is expanded on this day, on the 18th. We had a range expansion or a wide range bar, and wide range bars are relative to the most recent bars. Right? So you can see as this move started, the bars are relatively equal in size. It tried to roll over, and it couldn't. Bottoming tail bar and went up. So when you have bars moving in either direction, when they're relatively equal in size, it displays certainty in the trend. Right? So big bars like this on a reversal ignite the trend. And when the bars are relatively equal in size, as is trending, that displays certainty, a strong belief, confidence that the trend will continue. Near the end of the trend, the range expands again. Good morning. So the range expansion doesn't always mean it's going to reverse down. So in a very bullish market, it consolidates sideways. And that's what the Dow is doing right now at resistance, which is suggestive that it can go through here. We don't have the confirmation of that yet. And when we got daily ranges going sideways like this, you're either holding in alignment with the trend, you might be considering shorts, right? Initiating short positions because of the location and the length of the trend up, which has gone into resistance in the wide range bar. It would be foolish to put a stop just above that high. It would be better to put on a smaller position size and maybe give it more room. Because you're anticipating something to happen, and a wiggle can take you out of the trade. So that's how I would approach it. The more conservative way to approach it is to wait for a confirming, but potent, powerful candle. I call it an event. Dan calls it a something. What it is something that jumps out at you and says, holy crap, that really means something. And so this red bar is the beginning of a something, but just imagine if this was gapping up this morning to the 200 and it was a red bar that closed down here. That's an event. That's a strong indication that the top is in. And we don't have that now. Right now, we've got a choppy consolidation as we look at the Dow futures. And we'll see what today brings. Is it another inside day where the volatility or the ranges are just contracting so tight that it's inevitable that something's going to happen one way or the other. And that still could be a whipsaw move before it starts. So we're waiting. We're waiting for that event right now. And so as we're looking at this chart, and then we look at other markets, that's what we call intermarket analysis, to say, hey, is there some event somewhere else that isn't over here that could be guiding me as to where this market's going to go? In other words, we're looking for the weight of the evidence as we look at different markets. If you're just a one market trader, that's fine. That's fine. But you have rules or some kind of rules, as I'm explaining, to guide you as to what's going on here. And as we look at this chart, it says we're in an area where that something should happen, but it hasn't happened yet. So if you're going to initiate positions, put your toe in the water or stand aside and wait to see what's going to happen. Well, let's take a look at the other markets. So here you can see the difference looking at the S&Ps. And that's why I said the Dow is showing relative strength. So here's your wider range bar up into resistance. It's the same thing. And I put these reference points in before prices started going up. My favorite person in the room always likes to press my button a little bit. That being Alex, is like, where's your fib lines and where's your trend lines and so on and so forth. But so we go back and forth on whether that's any piece of useful information. If it helps you in some way make a trading decision, fine. But the essence is you just need to look to the left and see where there's some congestion. And that's going to be the probable stopping points 99% of the time. All right, so same situation here. So relatively equal size bars, range expansion into resistance, bigger red bar. Right, so a more powerful something or event there. And so far, what we have is that the prices are staying where they need to be relative to that big red bar in the lower half. The day is young; it's just beginning, but this is part of our systematic analysis and as to what's happening here. And so what does that mean? It stays weak, but if it was to retrace back to the top of the red bar, we've got a red bar ignored, and that would be bullish in alignment with the Dow. So we're looking for some information here to confirm this potentially being a top. NASDAQ, same thing, a little bit clearer as to the event. We don't have the wide range bar, but a gap down and a close below the high bar. That is a signal to some right there, sell short. That's okay. And they may have a stop above here or give it a little bit more room. And right now we see this staying in the lower half. So at this point, does this stop here on the hourly chart, this retracement? Does it start to roll over, which would say, hey, let's short it. And let's see what happens from here and see if this turns into a red bar. As you can see, the hourly here is now trending down. It's spiked lower. It's had a deep retracement up into this drop. That's why this bar is well into the prior bar, but that is not negating the message on the daily chart. It does here, meaning it puts this drop. If you're short, it's certainly a concern, because if you shorted up here and you had this drop and you didn't cover any, you just saw the majority of your profits gone. And the depth of retracement here puts this in question. Does this go sideways? And it's the same concept that I just talked about on the Dow chart, going sideways at resistance. Does this go sideways here and absorb this resistance and defy sellers stepping up again, which would open up the door to moving back up and, of course, possibly taking out yesterday's high. And that, from a daily chart perspective, is what are interested in here right now. Can it take out yesterday's high, or will it take out yesterday's low, or is it an inside day? We'll know by the end of the day. Just take a look at spiders and Qs for those that don't have this information. So yesterday, why, in your opinion, is volume? Because of what the chart says. right? I know what you're saying, Diane. I'm not saying it is irrelevant, but what I'm saying is you don't need volume confirmation. It is secondary. You don't trade volume, you trade price, right? So when we look at a big bar like this and say, that is something, that's an event, that says prices are going to retrace. If it happened on lower volume, that doesn't mean that's not what it means. And so technical analysis 101 says, you've got this uptrend, you've got this downtrend, you should see volume increasing as it moves up, and on reverses and on retracements, it should happen on lower volume. And if it retraces on low volume, that's bad. Well, the broader markets have been retracing on lower volume for 8 years, right? So we heard that at the beginning of the advance. Well, am I going to stay out of a market that's trending higher because it's going up on low volume? So this is the kind of information that everyone is indicted with, and it makes them question everything about technical analysis. So our approach is keep it simple, stupid. This is what the price chart says. If the volume is there, fantastic. And so as prices dropped as they did here, as the volume starts to pick up, that's useful information. But so is that the fact that the range began to expand. And that tells us that the majority are now joining, and, the Johnny-come-latelys, and we're probably close to a reversal. And then when it begins to reverse, does it happen on a bottoming tail bar? Does it happen on a narrow range bar? Or does it happen on a gigantic wide range bar? So price is what we trade. It isn't volume. And look, you can trade without volume completely. You can trade without it. Do I? No. Do I read the volume with an indicator? No. Am I looking at this and saying it's going up on lower volume? Not really, because I'm focused on the price. But when I see a big volume spike, I pay attention to it, because that is kind of like an event, something I need to pay attention to. So yesterday, buyers stepped up at the end of the day. We had that 15-minute sell setup. It started to roll over. It didn't. And sellers ran away. Let's say, buyers took control back, and we got this bottoming tail bar. And so now, can it take out that high? Same scenario. Can it take out yesterday's high? Can it take out yesterday's low? Are we in for an inside day where we're going to be sitting here all day watching the grass grow? We'll see. Qs, again, weaker, but bottoming tail bar. He says, I thought REB had to be ignored within a couple of bars. Yes. Yeah, Frank, I would say yes. Like this one was ignored in one bar. So yeah, you do want to see it happen in a couple of bars, but let's say it's 3 bars. Should be relatively soon. I mean, when you have, if we just say red in RBI, well, it's already defining that it's been ignored. But let's say we see a big red bar. Well, that has meaning. Does it follow through within 2 bars, 3 bars, whatever? So bar by bar is going to guide you as to what's happening and what your thoughts should be. Similar story here in the Russell. Gap up, narrow range day rather than a wide range day at the end here. And it began to expand, and I thought this was going to possibly accelerate, but it gapped down, right? And now it's pulled back and it's sitting on this support. And I think that, buyers and sellers are kind of sitting on their edge of their seat waiting for the next shoe to drop. Hey, is this trend going to break, right? Should I start, getting out of longs? Should I start hitting the short side more aggressively? And it's not totally clear yet. And that's where we're at. We've got a potential top in place. One of the things that, we've covered and talked about at the beginning of the week is that the wrong way option traders, we don't have a signal yet. And that has been something that has helped support this market, that those wrong way option traders haven't loaded up on calls yet. So they began to, you can see here on this day, which was right near the top, but they've gotten bearish really fast. Now, what we want to see is that they actually are buying calls during the consolidation. They're not doing that. So there's this, even though it's in a downtrend, the weeklies are in downtrends and so on. This is kind of a picture of that old saying that the market climbs a wall of worry, right? So quantifying that with a put call ratio, it's kind of like saying, hey, this thing's climbing a wall of worry. It's like, let's say the wrong way option traders or hedge fund managers and fund managers. And, as this thing continues to go up, they're scared to death it's going to drop. And they should be, because of the nasty crack that happened that started last year. And these weeklies, monthlies are in downtrend. So it makes sense. So they're hedging rather than saying, hey, this is fantastic. Everything's okay. Why are they're not always the wrong way, trader? They're wrong at the end of the move. Meaning, as I just said, they're hedging, but at the end of the move, they're going to say, what's the point in hedging? Everything is safe, and it won't be. All right. So transports, we're playing catch up. They pulled back quite a bit, still in an uptrend, but a breakout failure. And let me get along here so Dan can come on. Bonds beginning to pick up a little bit. So a little bit of concern there, could put a little pressure on the market. We'll see if this starts poking up. I'll send an alert for that. Oil holding up, but we know a lot of those oil stocks, and not only the oil stocks, but this pattern, you'll find it in a lot of stocks where there was this bottoming pattern that gapped up out of this base and it came all the way back in again. And that is a concern. I mean, if you were long, you'd either be out already or your stop would be down here. So it's sitting on the edge. We can start looking at stuff after things get going, but I'll just touch it quickly. Maybe a W bottom here. This thing just always goes down. It has little blurbs or, blips and then goes down again. It's probably one of those things that has contango that Dan talks about. Anyway, or just a tremendous supply overhead, of natural gas. It just has gone down forever and ever and ever, pretty much. You just see what I mean. But it had this big move, and so maybe it can have another one of those big moves again. You'll see. And gold, kind of just correcting up there, kind of holding up okay. All yours, Dan. I don't know, with some nice gappers here. Founded.
Yeah, there are a bunch of them. It's a lot of earnings plus the semis. A lot of huge gaps in semis. But yeah, trader. Yeah, I posted on Facebook to your question. You're saying, hey, it's going to be cold weather severely cold the next 2 weeks. Well, guess what? If you know it, the market knows it. So that fact alone is 100% irrelevant to me. Like, let's say hypothetically, right on this gap down day, you told me the identical information. I would say, I don't care. The market priced in even colder and longer weather than was reported. And so that's just another example of why charts, they're forward-looking. They encompass all available information plus speculative information. All right, let's move on. Tandem, we have our small covered call. That's doing fine. Verizon, we're short stock. Had a bullish day yesterday, so he's on probation. And I thought about legging into a covered call, or covered put rather, yesterday, but there was no juice in it. We're short Disney here also. Spiders and Qs. We have bear call credit spreads, and bottoming tail, it's not giving it up, but there's no adjustments right now. other than possibly legging into an iron condor if we want to say, all right, it's not going to fall. But then you got yourself on a bullish position too. MDB, we have an iron condor. I did a little video on that real quick. These are some I'm just watching. PLAN. Weight Watchers has been weak. FEYE. Possible put selling trade. Data. Let it go sideways, but it's holding the rising 20 and 50 right there. All right, gappers here. URGN 4177, so that's a very bearish gap. Yesterday was a bearish gap under a green bar. So I'm not sure if we looked at that or not. And then looking at this 15-minute chart yesterday, that would have been a beautiful 30-minute low play, which would have, you can see, triggered into the 1030 reversal. But, I don't know what to do with it now. WVE, never heard of this guy, but that's a bearish gap under all this. I'll put that in a window. This is getting shellacked. McKesson 122. Now, see, whenever I can't see support or resistance and I have to go to a bigger time frame, that almost by definition is telling me it's too excessive. Look at this run, though, they'd had. That was a bullish run last year. This is a bearish consolidation in a weekly. So if we ever did trade this to the long side, it would be just a short-term trade because the weekly is not in agreement. So it's gapping way the heck down here. So my bias on things that gap excessively, if it can't fall and buyers step up, it's a 30-minute high candidate for a day trade and selling expensive puts because the volatility is going to go off the roof here. PTC 7950, way down here. I don't know what to do with it. STM is getting a bump with the semis, but that's an ADR. So you can day trade it if you get a setup, but I don't